Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the Australian share market has begun 2025 positively, with the ASX 200 up 1.8% since the beginning of the year. However, Thomas Atkinson from FX Evolution says the outlook for the index is less certain than at this time last year.
We've got a histogram up here. It basically says the volume profile. The biggest ASX traders, I guess you would say, have been buying a lot, or at least transacting a lot at 8,200. We have to assume it's purchases because the market is obviously up from this point. But yeah, a series of higher highs and higher lows. There's a red arrow kind of pointing to that most traded zone and how it reacted around there. And we had some what we call wick candles, which are basically, I always like to see them as excitement of the traders. That is, if a market goes down and then all of a sudden rejects with this huge wick, then effectively it's telling us that someone's kind of liking it. We also have down the bottom a MACD switch to the positive side. And as viewers can see, when that happens, it tends to be relatively sustained. So I think that the start of 2025 is looking quite positive. It's certainly more murky than 2024. I think 2024 was much more easy to see as just bullish all year.
A stock Thomas has been focused on recently has been Fortescue, which has just made an offer to acquire Red Hawk Mining. He says iron ore has made a higher high, yet there's concern over a supply glut with the build-up of ore in Chinese ports.
So the price has moved up in recent times from being pretty low at the start of 2025. Had a really good move up to $19.50. It's now pulling back down. You'll notice I highlighted a red box. That area is basically the most traded zone again. So it's where we've seen the most transactions go through on the charts. And we've also got a Fibonacci level coming up soon as well, which is around $18.20. So these should act, you would think, if buyers remain in control, that they should find some buyers around here. And that's potential. Also seasonals going into earnings. So in Australia in February, and traditionally been okay for the iron ore miners. So hopefully Chinese New Year and everything else kind of acts positively.
Meanwhile, the US dollar has continued to reflect American exceptionalism. But is the Aussie potentially the best way to play any potential pullback in the greenback? Well, here's how Nick Twidale from ATFX sees the technicals.
I mean, you can see that's the daily chart. I put the daily charts out today. We're still very much in a downtrend. I think I go back to what I think is going to really dominate moves in the Aussie at the moment, and I think it will be that tariff. And I think for the Aussie in particular, it's those tariff threats against China. I think he would go harder against China than, and I have to put a huge caveat on, I cannot read Donald Trump's mind.
No one can.
And I think that will pressurise the Aussie. Conversely, I can kind of see where Citibank are going. It's the Aussie is probably sometimes the better option than some of the other major currencies we've got at the moment, just from the way our domestic market's moving. But I really do think the greater global growth story is going to hit the Aussie harder than our domestic situation at the moment.
Well, that's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.